market news now. Stocks in Asia advanced as traders bet that China's latest property stimulus measures will aid the economy, and data suggested that the U.S. interest rates may be approaching a peak. Hong Kong benchmark indices outperformed the region as investors resumed trading after a closure on Friday. Other major indices also gained, while U.S. markets are shut for the Labor Day holiday. Meanwhile, PPC has appointed Matthias Cadarelli as its new CEO for the next 4 years, with effect from the last quarter of this year. The cement giant has been charging ahead with slashing debt and edging closer to resuming dividend payouts last paid in November 2015. Their shares are down 0.7%, trading at R2.60, having climbed more than 20% in the year to date. To give us more perspective on the markets, we are joined by Gary Boyson, who's a portfolio manager at Rand Swiss. Gary, thank you so much for your time. So with this background that I've just described, where we are getting drip stimulus measures coming in from China, as well as markets betting that the Fed is done, how are you reading market sentiment?
Well, market sentiment's fairly positive today. So, across all the sub-indices, we are higher. And as you said, a very strong start in China. But of course, volumes are low because of that Labor Day public holiday. Now, the big moves that we saw was really on the Labor Day out of the US on Friday. So when the non-farm payroll number came out, we saw the dollar index blowing out around 1%, so moving from around 103 to 104. And that it was on a very mixed number. So, I mean, we're expecting, 170,000 new jobs to be added. We got 187,000, but got big revisions down in June and July. We had the unemployment rate ticking up from 3.5% to 3.8%. So, a lot of kind of mixed data coming through in that print. But the market interpreting it as needing a stronger dollar and needing stronger equity markets.
Okay, so let's look at things locally. We've got two JSE-listed companies, Avior and RCL, releasing their numbers, both describing a challenging trading environment, with RCL opting to withhold a dividend. What were the takeaways when you look at both those companies' numbers?
I think the takeaway is that they're both pushing through price increases at the expense of volumes. So you can see that revenue for RCL up 17.3%, revenue for AVI up around 7.8%, but both of them suffering in terms of how much the consumer will accept in terms of these price increases. Both of them also facing obviously dire kind of load shedding impact to their businesses. Looking at RCL specifically. They're not actually doing a webinar presentation, which is unusual. But I think you might see a little bit of a kick in the share price going forward, because we have seen their major input costs, specifically around their rainbow business, which is maize coming down by about a third. So it was a tough period for them, but I think an adequate result, even though they did see headline earnings per share falling around 45%. And then AVI, obviously a little bit more stable business, and they saw diluted headline earnings per share actually up 4%. So a little bit of a stronger performance on the bottom line, but still really just lamenting the weak consumer demand and the 58 million rand they had to spend on backup power solutions.
So we've just kicked off September, so to speak. I mean, can you give us a sense of why, depending on which trader or analyst you speak to, September seems to be the worst month for markets, specifically the S&P 500?
Well, it depends on your sample size. So it is a thing, the September effect, and people will talk about it. And there's all sorts of reasons given for why September is a weak month for financial markets. For me, I'm a longer-term investor, so a weak month in financial markets is just a great time to go and buy shares. But it could be a self-fulfilling prophecy. If everyone talks about September being a weak month, it starts to become a weak month. And as I said, it really depends on your sample size as to whether this statistically holds true. So if you look over the last 100 years, and if you had bet every month that September would be a down month for markets, you would have made money. You would have been correct. But if you had bet every year since 2014, you would have been wrong. So definitely the correlation not holding over the last over the last decade or so. But longer term, it has held. But for me, I think if there is a sell-off in September, it just becomes a buying opportunity.
Okay, so if you had to look at both the local and global markets, or perhaps even stateside, what would you say is the big question right now for the market?
Well, there's a couple of big questions, I suppose. So the big question is, of course, going to be around inflation, because the cost of capital, as determined by the Fed, is just so crucial to every financial market price. So what's going to happen to inflation, in the US and globally over the next 6 to 12 months is going to be the determining factor on where interest rates move, and that's going to be absolutely key for anyone in financial markets. So that's kind of the short-term answer. So in the medium term, I think the big question hanging over markets at the moment is also this whole concept of the AI revolution. It's really driven what they're calling the Magnificent Seven stocks, the likes of Nvidia and Apple and Google, higher for the year. And we've seen the rest of the market, the broader market, not actually delivering the kind of returns that you're seeing for anything that is linked to tech. And I think the idea of, is this real or is it not real? Are these valuations justified? That's a big question for markets at the moment. And if they are justified, can these stocks go a lot higher? And if they're not justified, will we see a rotation out of them and into the rest of the market? Are we going to see some of the more traditional value play stocks coming back? So I think that's also definitely in the medium term on a lot of people's mind. And then, so I'm trying to think of a long-term one for you as well. I think one of the big long-term questions in markets could be population demographics as well. What will happen with population demographics over the next, say, 10 years, and how will that influence stock markets? Because we've had a rise in global population for the last 50 years, and if that changes now and we go to a more subdued population growth, how do stock markets react to that? And I think you could be in for flat returns, and you might have investors needing to look for alternative ways of boosting their retirement portfolios, for example.
All right, Gary, thank you so much for your time. That is Gary Boyson, who's a portfolio manager at Rand Swiss, giving us his perspective on the markets. We're going to take a quick break. When we come back, we'll have more news for you, so stay tuned.